Hey everybody, Scott Riley, the Market Update Desk. It is June 30th. Hard to believe we finished half of the year already. NMLS number 157524. We got a few things going on in the sports world. Of course, World Cup is now at its knockout stage. We have Wimbledon that started, and the Tigers actually won yesterday. The Lions released Terry on Arnold. They've got lots of guys still injured or no longer with the team. In the market, we saw one of the early employment data pieces for the week, which is the JOLTS report, job opening and labor turnover report. That showed in May that there were 7.6 million job openings. Now, this was close to figures that we saw in April, but it's still about 300,000 more than what the market was expecting at 7.3 million. Now, there's a surprise. There was a big influence on this report from the World Cup. Now, openings in leisure and hospitality were up 95,000, and accommodations for food services were up 62,000, with openings in May higher due to this. Now, this could lead to a stronger job report in the next couple of days within the ADP and BLS numbers. In the report, the internals, though, were still somewhat weak, I would say. The hiring rate remained at 3.3%, which is just off its lowest levels from 2011, excluding COVID. The quits rate remained at 1.9%, lowest level since 2014 when we removed COVID. Now, that shows us employers are still not feeling confident about leaving jobs and quitting as much because there's much less poaching going on from other companies because the overall hiring is less than what it's been historically. Now, tomorrow's ADP report will be ahead of the BLS report that we get on Friday. The market's expecting about 110,000 job creations in June. Now, we definitely would not be surprised if those numbers come in higher than the 110,000 that are expected. We also saw some home appreciation data come out today. April's Case-Shiller home appreciation report showed a non-seasonally adjusted month over month plus 0.8% appreciation. FHA showed plus 0.7% non-seasonal adjusted. Very, very healthy numbers in there still for home appreciation, showing that home values aren't slowing down, especially here in the Midwest and especially in West Michigan. Now, apartment lists showed that rent renewals were down 1.2% year over year. This is important because it's very different than the internals that we are seeing within the PCE and the CPI for shelter costs, which impacts significantly the overall inflation number because it's so weighted within those two reports. Now, with the new chair Warsh, we might just get to see some more real-time data and metrics that will be reviewed and analyzed and taken into account by the Fed in overall analysis of shelter cost and appreciation, which would be a good thing. The lag effect for these rent renewals hitting shelter cost within those reports are just too long. Sometimes we're seeing 12 to 18 months. Now, for the day, we're seeing the 10-year Treasury up 3 basis points to 4.4%, still trading in a very narrow range. We're seeing the Dow still moving at a very, very healthy pace, up 79 today to 52,255. We did see, I believe it was the Russell index hit, I think, 30% up for the year already this year. Huge numbers within the market. We're seeing still a cooling within crypto, specifically within Bitcoin. It's down to 58,411. Oil remains fairly steady at $70.09 a barrel for WTI light crude oil. The rest of the day will be fairly quiet. Then we're going to get into tomorrow's ADP and then Friday's BLS report. We're on top of the market. We are working all week and weekend. So if you're looking to make an offer, holiday weekends are the best time to get offers accepted. You get less competition. We're on call. Our realtor partners are on call. give us a holler, 616-293-2189. We'll go through the options, help get you pre-approved, and work with your realtor partner to help get your offer accepted. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan.